Hey everybody, welcome to January 8th, 2026 Principal Profit Trader Coaching Call. We got a daily chart up here and we're going to get right into it. And on today's theme, we're going to talk about the difference between what a system might say and what your body might feel. And one of the things we talked about in the channel is that once we broke this balance, right, there was good odds that things would start trending, and they did for a couple days. And then I said, okay, this is 100% of the range it broke from. And on top of it, more importantly, you're testing major resistance. Major resistance is defined as like at least a month, 3 months to a month or longer of like the top of range extremes. And here we have it. And even though it didn't feel right, this was the area to exit runners, right? There was a balanced breakout setup and to potentially even initiate shorts, really, because basically it was the same zone that we shorted a couple weeks ago in early December. So remember, if we go from this date when we tested it around January 6th to 5th, and it starts bouncing on November 18th, that's like more than a month. So we're in a major sideways channel. So going up there on first test, relatively straight line, when the largest candle's coming at the end of the move, and there's a hook from extremes on the 200. I said at the very least things can go sideways here, right? Like we wouldn't just break on through, even though I want us to break on through. But obviously what you want and what you don't want don't always align. Now, if we go on the weekly, right? It's not like this sideways potential breakout is totally invalidated yet. We could just continue to range here. The blue is over the orange stochastic, so the upside momentum is being supported by that. If we look at the RSI momentum indicator, divergence indicator, and this one's just the regular stochastic, right? We can see that one of the risks, though, is that we've made continual multiple higher highs while we've made lower lows on the divergence indicator, right? Indicating a bear market. Then we've had a strong move down, which corresponds to this, but this recovered a little bit quickly, right? Compared to this one, which is taking more of its time. Now, one of the things that there's a possibility for a move here is the fact that we have previous support here, right? This 30 level sort of to this launching point here up to about 34.89. That's an important level because when it held, it marked the start of another larger time frame trend. And when it didn't, it started the mark of a bear market. So if we just go back in time, just as an example. So we're around this level here, right? Which is around like this level here, right? And this is in 2021, similar pattern, right? Broke down, went up, made a higher high, then kind of, going sideways. You're thinking, will this break up or is this going to be a double top? And the fact that this made a higher high and then this didn't was sort of the heads up that was a divergence brewing. But then when we kind of made this breakout, like where we are right now, on this important moving average, this orange one that I have, okay, when we couldn't hold this level at 34.89 and it broke down, then we had an extended recovery, right? It went lower, it went sideways, it went down. It was a bear market for years, right? So we're not at that special moving average that did that same beauty pattern in the past. And we have held here. But if we start to break down really strongly, if we go back in time, let's just look at that example one more time. If we go back in time, we look at that when we came up here, it's kind of like the same price level. The RSI, let's see what the stochastic was doing. Okay, so that's one thing that's kind of good. It's really good. At that time when it was doing that pattern, right, in 21, we had already had an extended orange over blue indicating that the momentum was going down, right? Now we have the opposite. We have a bounce after a couple bounces on this level and then the cross up, right? Like cross up, cross up. So there's conflicting things going on. There's this multiple divergence that really hasn't panned out. We have a similar pattern to this thing where it's coming up and potentially going to test this 21. If this comes up here and tests this 21, and then this starts to reverse, right? Then we're going to be in a problem here. But one thing is that like I said, it's not already orange over blue. That's really good. Are you guys having trouble hearing me?
Nope, I can hear you.
Okay, because I just realized I'm using my other computer and it's right near my white noise machine. So I was like, okay, maybe you guys couldn't hear me. Okay. Um, I'm not sure if
Question.
yeah, do you have a question?
Yeah, what the top indicator showing bear and bull, what's that indicator again?
Yeah, that's a really good one. So I'm using both. These are two different types of stochastics. This is stochastic RSI. That's how you find it. And then this one is the RSI divergence indicator.
Okay.
So this one's basically like, more like an 80 line, like divergences, and this one's more about momentum. So in
Okay.
conjunction, they're pretty good. I mean, I'm not writing bull bear. That's the indicator helping us with that.
Okay.
I did draw this
Great.
trend line because it's like, well, look at this. We've made 1, 2, 3, 4, 5 higher highs, and we haven't even, you know what I mean? So
Mhm.
we're at a really crucial spot right now where if you look at it, it looks very similar to what happened here, like I just said, and then popping up and hitting this moving average. I have circled here to remind me. The one contextual thing that's super important, and we're at this similar level here, if it breaks down, we're going to be in a bear market. But if the one thing that's contextually different is that when this was popping up, like I said, this was already reversing extended bearishness here. That's bad. Look where we are here. We're kind of reversing up. So there is this potential to hold here. In a way, it was different than that market. If we go on the daily, right, we had a hook from extremes, larger candle at the end, tried again. And that was actually a great short. I don't know why I didn't short that. I think I got to go back. I think it's just because I'm so energetically conditioned to want it to break out as an investor as well, that it is hard to switch biases. Like we had a couple of days of riding the screen up, and you just have to condition yourself that until that major resistance is broken, it has a positive expectancy. So the correct thing to do based on that automatic order rule, which is I added to my daily calls, to remind myself like you need to short there and at the very least exit your longs and don't start going long again underneath it. It's one of the things that I've done this mistake so many times now that I just like write about it. I'm like I can actually see myself doing it. So it's just that's just part of trading is like really kind of like examining these repetitive habits that we know aren't good for whatever reason. I get energized around a potential bounce breakout play. But remember, when I actually took this bounce breakout setup, the breakout is the momentum up. And if it doesn't break out here, then there is no setup. Now that wasn't like, it would have been nice if it broke up and then just trended up in a regular timely fashion. If you guys remember, it broke up and then it went sideways for like a day. Like there is no guaranteeing anything. This is what I was talking about. Like the setup was as this candlestick broke out, because at that time I had this range high from here, here, and here marked. Now is when I switch this to support, I have this support now as this high. The broken these selling tails are now acting as support, right? But so it's a little bit of an art and science to the zones, but really what helped me see that hidden pattern there was basically the fact that we were just basically pulling back right into the daily cross here with a zero line reject. Now, if I didn't get too aggressive yesterday, I would have went in. I think my body was just like, oh, I got to be more patient. I'll wait for a pause day, even though I knew that was pretty good support, right? And that really was right. That's when my system said like go long. I almost went long. It was a zone fade. I was like, oh, I'll just wait for a pause day. And it's like, all right, well, sometimes you just got to miss them, and then that was missed. But and it just makes sense just from a contextual point of view. Like when you're coming from a really strong zone that I shorted before and brought us all the way down here, this time it brought us there. I mean, look at that, really strong. And this thing, right, it just bounced up here. So it's basically, if you were, let's say, going long here, it looks bad now. Hindsight bias is 2020. And there was like chances to go to the VWAP, but I was holding for a larger target. But the idea is that even though I was seeing that smaller time frame idea, really the who was in control was this double top here, which should have been an exit on the short and a stop potentially even upwards past this yellow zone, or even one here and then one here, because it's a more than month long resistance zone. That has the positive expectancy. What doesn't have the positive expectancy is trying to go long underneath it, anticipating a breakout or something, right? We'll go long again once this breaks out with conviction on momentum, and then maybe we'll wait for a pullback, or we'll just buy a breakout if it's early in the day and it's up there going sideways, and then it breaks out. But you know,
I have a question, Mateo.
yeah, yep.
When you set your zones, it looks like you're doing it on a different chart than what you trade on typically. Is that correct?
No, nope. I'm trading on this chart. Basically, I use these
You
to
are.
kind of fine tune the entry here. Sometimes there's a daily, you know, zone or whatever. Like this zone here that I found based on those selling tails that are now acting as support when they were previous resistance is also in confluence with that 50-20 moving average cross, which was a great support, and the fact that the short-term bias has been bullish for the last like week or so, intermediate term or whatever, 2 weeks. And then there was a hook from extreme. So even though when I was going long yesterday, I was like, well, the hook from extreme, I mean, not the hook from extremes, the zero line reject wasn't even formed yet. It's just that the next day when you're supposed to do it, if you go in early, like the patience wasn't there. So you know what I mean? But the other thing you just got to remind yourself is there's going to be another setup 100%. So yeah, I mean, I remember this day. It's like there was a long here. I'm like, okay, I skipped that one, and then there was maybe I was out to lunch with someone here, and I was at a bar, and I was like, oh, I should long here. I'm like, oh, I don't go long on my phone, and that's the one that works out. You know what I mean? But if I stayed positive about that, really, I would have had the mindset to be clear and realize I marked this zone green for a reason, and that's the zone that I did short in the channel. And basically, I mean, if you think of, like I said, the what if you were going to rate this support zone at the time, right, which was just this here, this move got us to here, but it came from a double top that brought us all the way down here. And the other thing too is like really the edge really is at 9:30 in the morning a lot of the times. So another reason that I was thinking about going along here is like this was close to 9 a.m., 9:30. I mean, I almost bought this engulfing pattern as it was coming up. I'm like, it's too like this was the real short when I posted it. That was when I should have done it, but I wasn't in that mood. But that's just the idea that, you know, if you do have a zone, you are fading that as it's coming into the zone on even though when it looks the most scary. And I guess the second setup would be if you saw this buying town, then you jumped in around right around here. But if I stayed positive on this day, I always said stay positive because there's a short coming up later on in the day. And this was, going more towards the end of the day. You might say, well, isn't this a V pattern? Don't we never short Vs? Remember, every principle has to be compared to this entire probability scale. Because while this is a V, it's a very small V on an intraday time frame. And once again, it's going up into major resistance, which is a huge moves down. And the pattern potential plays here, if this resistance holds, then we just have a stronger balance now where it can come into this high volume node. This high volume node is the stronger support zone than this one here, right? This one was hard to see. It was just these, if it didn't have that daily moving average, it wouldn't even really, with the hook from it, with the zero line reject, it wouldn't have been a good setup. But it was, you know what I mean? So, and the other thing, reason why the skill in this setup is that you have to stay positive is that all it takes is like one or two more positive uh energies towards a potential setup to like make back everything. But if you're like still lingering in the past trade for whatever reason, then you're going to miss all these opportunities. So it's like you really got to switch on. You can switch on your mental jiu-jitsu, energetic jiu-jitsu, so you can come with an optimal state of being. You know. So I always imagine everything like what's the fractal compared to the larger thing? Like this V was smaller than this giant resistance zone. You're also looking at the momentum and seeing what time of day it is, right? If we did take this short, this was more towards the end of the day. That's a good time to short. Also, this long right was at the beginning of the day. So like the 9:30 and the close, they have edge. And then for the next couple of days, right, we were down until we got this arrow was just this bounce breakout setup. Let me remove it now. Ooh. And I had this to show the direction of the trend until it moved 100% and then hit a stronger resistance zone. And then when it broke the trend line, coming back up into it, that was a great other setup. Because, once trend lines are broken, they often have a little move in the other way for sure. What's going to be different about this is that the bottom of the zone, I don't know why there's one missing here. You see, I'm imagining this could potentially start now going sideways, but because it's been going for so long, you can't ignore this hidden support or resistance right here, which is this high volume node. Don't just like wait for these extremes down here, because this might be an area that's interesting as well. So, I mean, that's just what we're dealing with on the daily time frame, getting some uh active buyers here. So, tomorrow if we close like this is a bullish candlestick pattern with a zero line reject. So you'd be looking for sideways up calls. You don't just want to like buy right away because we're going right up into support. But if this starts bottom building, if we get something close to this, there could be another entry here. Now I'm always comparing the 1 week, right? Because this CCI is a bearish setup. That is an inverse. So like how do we do multiple times? Like how do we reconcile the fact that on the weekly time frame you have an inverse zero line reject, which is a bearish setup, but on the daily, now that that's kind of possibly played out, you have a just a regular zero line reject, which is a bullish one. Well, all things being equal, you want to give a higher weight to the higher time frame one, but then you also got to think about how the maturity of the time that would develop from based on the time frame. So like maybe this is more important towards the end of the week, and we can look how this candlestick closes rather than just looking at this and saying, "Oh, I have to short tomorrow only." When if you only looked at one thing, then you wouldn't be getting this holistic picture. So that's why the weekly chart is just one component of what we're going to do as day traders the next day. Because like basically the daily call is a trade plan for a day trader on the next day. And it's like, it's okay. You can say it. A lot of people don't understand that day trading is like the higher, it's the high, it's like the surgeon of the finance world in terms of you can do technically. So it's not like someone doesn't understand it, they're going to just think you're a pure gambler, and that's not the case because we're always looking at these higher time frames to try to go with it. Or if there's just pure neutrality, then we got to switch everything up. But one of the hardest things is this switch from the bullish setup to the bearish setup within the body. You might just be glazing on it and like, well, bam, that's a scenario where your runner gets stopped out, then you add and then you get long again. It's like, well, why didn't I just exit the runner and then short it at the resistance zone because it's major? So just write it in the channel. That's a rule that you would put down, um, especially on that first test principle. So I guess what I'm trying to say is I'm trying to relate everything on the daily call and everything I've added to it in terms of which one's more important, which one would be more important that day, and then which one might take more time to mature. So while this one might be important as this closes on a Sunday, I really want to see how this candlestick closes, right? It's not going to affect us as much maybe tomorrow as this one on the daily, even though we're both going to, uh, like the CCI is a daily setup, right? While the weekly chart this is going to be one component of it. So I'm looking at this to I knew that when we came up here on first test, we were going to get a reaction down. Odds were because I said, hey, this is a bearish setup a couple of days ago. It's not fun to switch that, but that's just what you got to do. Now, what's interesting about it, like I said, is that this hasn't confirmed anything yet. So it's a possibility that this is just a short term thing, and we can still march on. We're going to see how, like I said, this Sunday close is super important. And also this moving average, which acted as support, and then now is broken, is going to be really important as well. as well as holding this. I think this is the 100. Yeah, the 100 moving average. Holding that really good, breaking it, especially this low here at 75. Breaking this is going to be bad because then we're talking, look what happens when you break these patterns. You have more down and then at long, we're talking a bear market for a while. If we can hold here, right? There's a possibility. I still think that if we get the lucky scenario that we do eventually break out here, I think everyone here should really be watching here to consider reducing risk because that would be a more pronounced area where we could form a shoulder, kind of like we did here, right? And this was not like a long time. This was like actually, you had at least a week or so. So there is some time here, but it's not that long if you're not focused. Let's see, something's in the chat. Can you clarify what that top indicator is? Oh, okay,
You
that's yeah.
you answered it. Thank
Okay.
you.
Even though what we did is that we couldn't even produce a breakout pattern, right? We broke into it, which could just expand the range, and now this becomes more prevalent. If on the other hand, we had got a strong breakout and then it became like a strong tail into it, the false breakout pattern, that would be way more bearish. Those have higher odds to really quickly go down and really test the lows of balance, which would then make this even a longer and even potentially a breakdown setup, right? Rather than just increase the odds for that. But as it stands, we didn't get a breakout attempt, but we also didn't get a false breakout attempt. So what we basically just got is just more balancing. I mean, that's really what the market does. It's just within a fractal of time, it's either trending or balancing. And that's why the multiple time frame analysis is important since this is from December 31st, right? This is the intermediate time frame, right? Which has been really bullish, right? Now that we came up in here, the bigger picture bias up here has been down, 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 right? And that's going to affect the short term, which, switch the intermediate term to down because when we come up here, we have to be aware that the larger time frame bias for the next couple of weeks could reverse here. And that's just the hardest thing to at least at least for me it was easier to short here because the balance hadn't matured and the way that it got up there was in my opinion bearish, right? The way that this got up here was more bullish short term, even though we did break 100% of this balance by the time we got up there. It still was a Browns breakout setup, and this balance had matured longer, and the longer the balance matures, the greater the odds that you're going to get a breakout or a breakdown. Now we could take a look at a couple charts that will help us time the altcoin market, if that's even a possibility anymore. I mean, we're basically just going sideways around an area that has been an important inflection point where, the last time this broke down with conviction, we had alt season. And when it broke through it for a while, Bitcoin was the stronger coin. So that's why and this is also a special one up here that we had marked actually ahead of time. And it was a little bit, this whole area actually is around that golden mean. So it's like 61 point, whatever it is, 61.8. And that area seems to just invoke an indecision point, selling, buying, selling, buying. So this has yet to resolve. So if we can get a decisive breakdown, that would increase the odds for alt season, just like we had here. If we get up here, it's a stronger area of resistance, so it has potentially higher odds if we reverse, because that was the start of remember the January 2021. A lot of really powerful moves happened then for the next until November of that year. Actually, a lot of coins are doing well. And then the other chart that I've kind of added to the repertoire is this market cap dominance chart. It's just the inverse of the Bitcoin, and everything is nuanced, right? Even though last time the behavior up here was that it did eventually see currency flow back into Bitcoin, which boosted the Bitcoin price. This time we're coming up here, we're balancing, right? So that is less uh, clear on what is happening. What you want to see up here is the selling tail and the climax pattern, which is these strong selling tail reversals, and then especially on the retest, then you have a double top. What is higher odds that it would break out up, and we actually don't want that on this chart. We want it to go down for Bitcoin. Is that when price comes up here and then it starts to consolidate? That's when it's building potential energy for a breakout, because all trends start from balance. When you come up here and you climax really quickly on the retest, it's a double top and has really high odds to reverse these selling tails. That's why right in that language implicit is selling. But what I said in the channel today is that, yeah, okay, so this is going sideways. It's either going to be a breakout eventually or a breakdown. This zero line reject, inverse one, the fact that it came up here now, this is going to be acting as resistance, increases the odds for a move down, would be great for Bitcoin. Also, we're closing with this little candlestick pattern, which is a mini selling tail. We have another moving average above it. So it's like this double moving average with the inverse zero line reject. That should be good for Bitcoin tomorrow. And if it closes like this, then tomorrow my setups are going to be sideways to up. I'm going to be looking to fade support, whether it's at intraday, some type of double bottom with some exhaustion or divergence, and also if it maybe retests good support. So if it, coming into this zone again, and then I believe I had drawn here where the high volume node was. Let's get that going again. Yeah, just because that becomes a little bit more important now, is the fact that this has just become a stronger balance and we're already getting some buying even at this zone, as you can see. So is there any questions or coins you guys want me to cover? We'll just take a look a little bit
Can you
on some
go
of these.
over
Yep.
the can you go over the Vegas and the Ghost setup?
Yeah. Okay. So let's go to the daily. So I believe a Vegas is like a cup and handle on the CCI. So I think yeah, I was using that. Was I using a Vegas to talk about a breakout as well? There might have been something here where, you have a cup and then it's pulling back and having a handle, right? You can kind of see the pattern of a cup and handle in price. And the other thing too is you had when this crossed like this, when the turbo crossed over the CCI like that, that was an inverse zero line reject within the Vegas. In my opinion, so it was like a nice cup and then a nice handle, and then it kind of was giving us a heads up that, right, cup handle holding. It took a while to mature the handle, but eventually that was kind of giving us a heads up that we were going to the breakout out of that mature balance. There was going to be a break out and not a breakdown, because those pre-market conditions that increase the odds for a trend, they're just showing odds for higher volatility. But it's like there's other things that might come in that will help you. Like, well, which one is it going to be? You said trend, but you didn't know if it was going to be a breakout or breakdown. Sometimes you just don't know. That's why some people will wait for the breakout and then they'll buy, like the triangle breakout. Kind of, I mean, I slightly did that as well too. And I just think it's because the holiday. I was like, I was thinking about buying on New Year's Eve, and all that, because I'm like, oh, this is when the setups happen, when it's quiet and you're supposed to be on break, and I wanted to give myself a break, but that's the only reason I wasn't buying at the bottom of this, right? Because if you were trying to figure out whether to buy here or buy here, knowing it was going to either be a breakout or a breakdown, the heads up was the cup and handle the Vegas. So that was a pretty good question. Yeah, the and the setup really, when you get in on that, is here's the cup, and then the handle because they don't want you to have a lot of time. Like the other thing too is that they try to with the CCIs, it tries to help you with time. Sometimes you can crudely get in on a breakout and then you're waiting a day. But is there something, maybe a little bit more sophisticated? When you have the cup, that's the entry on the handle. I think they show those entries and exits on those charts that we posted with those little lines or whatever. Like the one line is the entry and then the other two lines in parallel is the exits. So this would be the entry right here. And that would have been nice because you would have not have been waiting as long as if you were just, you know, even though you would have got a better price here, if you were just doing a hook from extremes, you're sitting through a lot of pain. This is either an add-on or you reduce your time. And then it's just like a lot of people just can purely trade on this. Well, this was a hook from extremes. Well, then you sell up there, start shorting. This was the cup and handle. Here was a zero line reject. And if it closes like this, then tomorrow you'd be looking for longs. And then the ghost setup is that's like a longer um, it's a little bit more of a mature pattern in time. So the cup and handle is actually a pattern that takes a while to mature as well. But then the ghost is almost like just three touch points, right? It's like it would be you'd have one shoulder, then you'd have a head, and then it's I guess you could even say that a ghost pattern is sort of like an inverse head and shoulders pattern or a head and shoulders. They're just using a ghost image, and then the Vegas is a cup and handle. So one of these things about either candlestick patterns, like inverse dragonfly doji or spinning top or whatever they are the ones we just talked about. These bigger picture patterns that aren't just about like what the next day candlestick was and would be today. Is like there's like the same names or different names for the same idea, and when you're trying to like make sense of it all under a stressful environment, it actually can be confusing. That's why I really just like you can kind of eliminate most of them by just thinking like like today you could say like, oh, well, it's a spinning hammer doji thing. Well, I just call it a little buying tail, right? Rather than like a hammer that's really whatever. Because I just want like buying tail, selling tail. And if it's like a really big buying tail, it gets a higher weight. And if it's a really big selling tail, it gets a higher weight. So like this buying tail on this day would be like almost the dominant idea on the daily call. So it's like you wouldn't just mark that sideways up. You would say sideways up times two. You could mark that one twice. How do you do it? Well, mark it under sideways up, and then you could put like two little X's in it. If that's hard to do, you could, you know what I mean? You could put two yeses or like write an X under the comment so you know to add up two for that category. And I think that is a smart way to look at the system rather than just look at it in terms of purely adding up different weights. Some weights on that particular day because of the market context are going to have a higher probability, so you should give it more of a weight. You could even add 3 stars to some of them, like this a really big buying tail, right? So this one will be a little bit more difficult to play, to play out because it was such a strong move down that broke balance and all this, and it's leg count up. But this is a good example, right? I mean, this is kind of a ghost pattern here. I mean, like, you'd want like the middle of it to be the head to be a little bit longer than that, or the shoulder not to be as. But that's the idea. You have you know, um, a shoulder. Here's like a head, and then like here's the other shoulder, and then it's right around the buying tail, right, and then strong move up. This one is just a pure hook from extremes with a with not really a divergence because it's going with price, but just like it is a pure hook from extremes. And they if we go back in time, right, hook from extremes takes a while to play out and then goes down. Hook from extremes goes down. Hook from extremes with the selling tail ends this trend, goes in sideways, and then it gets its down. And then a hook from extremes on the bottom for a couple of days, bottom building along the moving average, another move up. Really couldn't break this level. But like I said, every time we've come up here, the bounce hasn't been as mature. And this time, the way we've come up and held this area is at least better for the bulls. And the weekly still has the blue over the red orange, so we have some momentum verifying that. Just it's just a tricky time to be in this market. It just seems that if the real winners this year on the bets were that if you were just holding the S&P 500 in gold, silver, uh, I don't know. There's a sentiment now that like so many people have been scammed by alts that a lot of folks are losing some faith in them. But just keep an eye on where like the money's flowing. Some of these venture capitalists. There is going to be some coins that do spectacular. I just don't think it's going to be as spread out as it once was. I mean, even here's volatility contraction as well. And I don't think there's any market moving news this week that's even worth. I mean, at this stage, it's like the FOMC moves it a little bit, not even as much as it used to because everything's kind of been factored in. And then the CPI, but nothing really. You'd want to see this to be more like how Bitcoin's is for a pullback continuation. Like that, that's a nice zero line reject that hit right at the moving average. The SWE one, though it moves with Bitcoin, it doesn't give me as much faith because it's not as separated. You don't have the yellow going through the purple line. Yeah, I mean, these could be pullback into like this is a pullback continuation, and a possibility to get this is a nice zero line reject here for dot. And then I'm not really crypto hunting. I got everything that I would need at this point. I have enough coins, but this one is not the greatest looking chart, not a lot of data on it, but it's interesting because it's going to be tokenizing stocks. But it does have a lot of competitors, so you got to figure out, it has some good partnerships with that clearinghouse, CC. But since this early December, it went from 6 cents, it already doubled. So just on a purely, when anything's double, people sell. I don't care if it's going to be great next year or not or whatever. Persistence is, been climbing a little bit. Still nothing really. One thing I like is that we have broken above this moving average, which is the 50, I believe, with the zero line reject, and it's mature enough. Every time we've kind of went straight line into it, we've been stopped. Yeah, well, that's what I got to say about the market today, guys. If you guys have any questions, you can unmute now or type them in the chat. All right. Well, I'll be in the room. You guys know where to find me. Keep at it. Keep trading, and we'll keep at it. There might be an alt season this year, nonetheless, if we can get a strong move here and hold. We're at this like critical. I call it the critical juncture for the last few weeks. There are some probabilities of market material that I've posted that says that the bottom is in for alts and Bitcoin. We've talked about how important the RSI is, both those different indicators, and the possibility of breaking this 4-year cycle. But like I said, I'm always thinking in terms of just purely classical TA, we have to hold that really important moving average on the weekly, which is the hundreds, and we have to overcome that inverse zero line reject, which is bearish on the CCI. And right now, the RSIs are still in the favor of the bulls. That could change, but right now there is a possibility. So yeah, if your energy is kind of like being pulled in two directions, like mine is, it's because you've maybe aligned a little bit with the market. One of the things that helped me today was I went out into nature and find the sun came out here, and it was like just shining on the path near the river here, and I sun gazed and tried to take in as much light energy as I could to raise the vibration so I could see myself see the market clear. That's the other thing. Like I said, it's that samurai energy that required of the spiritual jujitsu to get in tune with yourself and then present yourself to reflect back to the market as your highest self. So, thanks for coming out, and I will see
So,
you
so
guys in.
Matt,
Yes, sir. Yes, sir.
so because the thing is that it's a funny thing, but yes, I know that I'm breaking many rules on my studies. Like for example, I am supposed to be working at the same time that supposed to be hustling. But for example, today with the information on XMR, I mean, Sabril posted at 5:30, but right there was a trade up and down. And then I read the information, I pulled up the chart, and it was 2 p.m. and it just had top out. I I guess I need to learn like a routine. You have this routine in the morning that is the way that you focus, and then you gain traction, and then you put your mind that is neutral. So then you are in this analytic and receiving uh, mode, let's say. But whereas for me, I guess I have to learn to make a to be ready for the trade. It's funny how I posted the chart to a friend, and he was like, and then you took it, and I was like, no, I didn't take it.
Yeah,
So
it's
so
yeah.
it's
Well, knowing what to do
it's
and then posting a chart is like following the system, and that's like the spiritual side. That's kind of easier to do. Then you got to go into, well, if I'm risking real money, what does that imply? Then the body comes in and fear comes in. What if I lose? And then it really does put you in a fight or flight state. There was no reason why I shouldn't have, when Bitcoin pulled back into those two support zones, I wanted to go long. I posted that chart because that was the impulse to go long and tell everyone to go long and go long again. But probably like, man, if I lose again, that's I don't know how many that's I lost yesterday, then I would lose again today. That would look bad. Then I would, what if I wouldn't feel
yeah,
that has nothing to
exactly.
do with the system. You know what I mean? That's just the
Yeah.
mind chatter coming in. So
Mm,
I recommend just ahead of time before you when you got your plan, just make sure I have written
yeah,
down here, do that multiple time frame analysis, just do your larger time frame patterns, build your zones, and then think about where you're going to have these automatic orders. So
okay.
if I one of the things you could say to yourself, well, if I am going to take this mediocre trade, if it's going to get me out of the one at the high volume node or the one at the two moving averages when there is a zero line reject that you were imagining, then you shouldn't take it. Right, like which happened to me today. It's
Hmm.
like, oh, I lost yesterday at the shitty idea. Then the one when I should have jumped in, which had better odds for support, which was two moving averages on the daily and a zero line reject, and that moved far enough where it could have been short term exhausted, and I didn't know it was going to reverse the whole day, but you could have at least got a good move out of it. Whereas yesterday it was a mediocre zone. There was no zero line reject, and the resistance was stronger, and it looked like if you just look at the two times of the day that are most important, the 9:30 Eastern and then the close, you could kind of guess who's going to be in control on the day. Like that was another edge for today. The long at that daily was happening around 9 to 9:30. That means if you were right, you have plenty of time on the day to see who's going to be in control, and then the bulls can gain control in the regular trading hour. So it's important. Yeah, it's tough. You got to differentiate between what the right thing to do is for the system and then like the fear you have of when you risk real money and you put your stress on the line, because then it's like the marriage of the body, which is the corporeal fight or flight, the chemicals, the cortisol, it's trying to protect you, and then the flowing of seeing this huge sample size in your mind's eye. So it's like
Yeah.
thought versus materialism, really.
The sample
Is
size,
Yeah,
that's I have to even to like to write the trade like as if I was paper trading. So then that's going to give me the confidence, because what I feel that is like, okay, I was thinking about my process, especially with the end of the year, that you go and kind of like evaluate what are you at, and what happened, and why is it that I'm doing what I'm doing, and so on and so forth. And somehow I had the feeling like, okay, yeah, I think I might not be an expert on all the patterns of the CCI. That is one of the most complex indicators. I mean, like it's not very ergonomic. Let's say you have to know what is it that you're looking for, and so on and so forth. But there are the other patterns. I kind of like make an inventory, and you guys have told us many um, many ways to stack odds, but then right now, I have the experience to print the charts, to identify the patterns, and my social media, it's becoming like a micro learning stuff. When I can, and I guess I wouldn't be doing this if I'm not so passionate and love about the graphics and the charts, and understanding what's going on, and facing myself again. But it's the practice, it's the sample size. You're absolutely right. I have to like write my ideas, just like to have the confidence and accumulate the little small wins. Mm.
yeah, and that's why I
Thanks
wrote
for
in the
coaching.
channel about that sample size by visualizing those dots, which I've been doing today.
Mm-hmm.
Where it's like, this trade doesn't mean anything. That'll help you get into the next one. You have to think in terms of like a huge sample size zoomed out. So, if you can visualize each trade as just a dot and just imagine millions of dots, then it's insignificant in terms of its effect on the entire sample size. Even though right now it feels really important, will this work out? Will this not? Kind of a thing. If you're feeling that kind of fear.
Okay. Thanks
But the other
for
thing too is
hearing.
that the other thing you can say to yourself too is that like when you're feeling the emotions while you're trading when you shouldn't, just like, oh, it's supposed to be hard. That's normal. Then like it kind of eases yourself. It kind of like forces you to talk, to have this like stronger inner dialogue with yourself because you're kind of observing the performance state. The best feeling is like when it finances or you hit your second target and you're just like, oh, now I can go, I'll hit the gym up. I'll get to, do this, and it's like you go out and you get kind of a rhythm. If you miss one trade or it doesn't go well, then you can kind of get out of rhythm. But just remember, even if you feel like you missed a trade or you'll never get in rhythm, there's going to be so many opportunities that if you were just openly, neutrally positive to that possibility, you would be able to be in the state to receive them. That's one of the way. That's one of the
Okay.
ways you can overcome that FOMO. Like there's gonna be another setup. This might break out now to 94 and I missed the low at 89, even though the daily was there and I posted it. Well, just relax. There might be another setup. Maybe there's a short up there. You never know. You know what I mean? Just be open to seeing what is being presented and then thinking and then following correct process. And that's the best I think you can do if you're not Kramer or Nancy Pelosi. Kevin says that's totally what I've been doing lately. I had a ton of losses and then finally broke out of it, staying positive. Yeah, the hardest thing to do is when you visualize the sample size of the millions of dots. That's not something that your body can. You can't just be like, dude, this is just one trade, and then like instantly shut off the cortisol level. What made me feel better today was I really went on. I've been doing like a normal walk with the dogs loose on this plowed driveway thing out front, and I was like, well, I haven't brought them actually by the river lately, so then I just put them on the leashes and went right out by the river. Then the sun blasted through the clouds, and I was just sun gazing, and then the vibration went really high. That river and the sun, it was really incredible. That was like the first time I was feeling a little bit better about you know making a mistake yesterday, in my opinion. So it's
Yeah,
just
no, I mean, like,
yeah.
it's I guess also seeing that for my end, I'm I really feel it. Yeah, I mean, you're as human as anybody else. So
Absolutely. And Sabril says sun gazing. Yeah, sun gazing is incredible. That really raised my vibe and made me just appreciate the challenge of this and look at it from just a different perspective. I mean, one thing you can think about is that, when I went back to my reunion and talked to people that actually executed opportunities that I kind of was like, oh, maybe I should have done that. How did I just go completely off grid like this? Was like they were working, they were traders on Wall Street and things like that. And, I remember one of them basically said, like, I made a lot of money, I lost a lot of money, and I could just see it in his face. He just couldn't handle it anymore. He left. He works for the Federal Reserve now with a consistent income. My other friend that did so well, he kind of started his own hedge fund. He still lost everything in Polkadot, a lot of money in Polkadot. It's like you're gonna you're gonna take your shots with this. It's supposed to be hard. If you stay positive, like Kevin says, I'm telling you, it could be anywhere from like 2 to 5 trades, and you have a breakthrough. You're like 5 trades wins away from having a positive expectancy when you're in a losing streak. Yeah, if it was easy, everyone would do it 100%, and there'd be no edge. And the cool thing about it is that even though the execution of it is harder than like you said, that you intellectualized and understood what to do, but then to actually go through and do it is a different thing. That's why it's easier to be Mike Tyson's coach than to actually go in the ring and fight. Even though the technique is right there, you know what to do, blah, blah, blah. It's the same thing. So one of the things that's good about PPT is that like those rules are right in the channel, like the conditions for a trend, which allowed me to get in on that breakout, or writing down, I short at major resistance or zones. Like that's an automatic. I wrote an automatic order because it's been so hard for me to flip my bias like that. Like let's say like the last week or two has been up, and then we go up into a major resistance zone, and I got to flip biases. That's cycle for me to go from a positive to negative. It's my hardest thing, even though I've just been writing about it in the channel and I know what to do. It's easier for me psychologically to be like the first one in, to think positive, buying low, hoping for a turning point. That's easier for me than the opposite of that. But if you could just master what your weaknesses are, because like there's some systems that are only looking, like there's one trader I know that only does balance breakouts. So he would have only traded that one trade that I did last week or whatever it was. This one. I don't have the screen up, but I think it was like on January 5th or 4th, the bounce breakout trade. He only trades that. Whereas with PPT, we really, if you have the system has the complexity and the contextual way of how it relates, that you can actually trade in any environment. When you talk about the larger time frame bias and how you can weight resistance higher than support, and then it has expectancy that the bears would step in it. That's why I said expect selling on first test. Like I'm writing it. Why am I pressing expect selling? It can go sideways at the very least. That I should have just. Part of me is like, it can go down here. I'm like, yeah, but I can't see that. It's like there's something in my body that doesn't want to see things go down. That's just one thing I know about myself. So finding out what that is for you, other things like if you take a loss, you might want to get back in a lot. I know someone that does that. They take like 10 trades a day. They shouldn't. So that's what the hyper awareness of what the trading will force you to do if you keep at this is that it's going to actually strengthen your observer effect, which doesn't always mean that you're going to be feeling good, but what it does, or being aware of positive thoughts. But then you realize, well, I'm not every thought, and I'm not just my feelings, and now I can really, and then you have these other tools that it's going to make us go into that, which is the awareness. Like I'm not going to fake that I was feeling good until I sun gazed today. You know what I mean? That's just the awareness of it. So, and I think that what would help too is the programming the subconscious as well with those tapes. Like the times where I hate listening to the tapes the most is after I lose. I'm like, fuck these tapes. You know what I mean? And that's that's the time when you should listen to the tapes. It's easy when it's winning. So yeah, that's my advice. We're gonna stay positive. Uh, really
Okay,
crazy
I'm gonna
times. Yeah, with the
come back
Venezuela
to
thing. I
tapes.
mean, what's that?
Coming back to the tapes, it's exactly when you need them, when you hate them.
Yeah, exactly. And I'm at the point where I'm not so rigid with I have to do my super performance morning routine this way. I like use aspects of it, kind of how I am doing it. So like just switch it up. Use the tapes intermittently when you need them. If you are on a losing streak and you're feeling down about the next trade, one that's really good out of the tapes that I would listen to is Thinking in Probabilities. that's helping you with that visualization of like thinking of like of your next 500 trades. I mean, if a buy and hold strategy that's based on some research or whatever, you have the wherewithal to have huge drawdowns and a lots of time. Why are you so hard on yourself when you're actually actively trying to do it? I'm not saying that's why you got to take like 30 trades in a row and like completely throw out. That's why you have the risk side of the PPT system is actually should be a rule that should be unbroken, like that fixed percent risk model. So like on the loss that I did yesterday, even though I got to the view app a couple times, I think it was like just a little over 1%. That's like good risk management, less than a 1.5. Like that's just, so that's why on the journal, even on the losing days, like what did you do well? You can find something you did well even on a losing day. And for me, it was like, I didn't take a 3% loss. I didn't break a rule on that. Keep holding and thinking it was going to turn around type of a thing. So yeah, we'll keep at it. And like I said, I just have to remind myself, just when you think it can't go the other way, it can. But I mean, it's tough because being nimble in your thinking is important. And that's why, writing, if it does this, do this. It's important for us to be like that. Now, if we get too married to one idea, the markets that we're trying to trade are the hardest markets to trade. Bitcoin and altcoins. It's like you just decided to go to like the hardest PhD level of trading, in my opinion. Other markets are a lot easier to trade. Like some of these stocks, the S&P just goes straight up. Like even with the ES, I have if I was trading that full time, I would have the market internals to give a little edge. And imagine you've been trading that for the last year. It's just been going straight up. So we'll have our day, us crypto guys. Don't worry, we'll get there. So, well, I appreciate you guys for staying out and keep on trading. If you got to wear a suit, you wear that suit. So
Thank
tomorrow's
you.
Friday. You know what I mean? It could be a give back Friday, but the way this candlestick closed, well, if it closes like this, then the Bulls got a shot. I think we could go back and at least test 94 to 94.751. So thank you guys, and I'll see you guys in the room. God bless.